A full-scale Russian invasion of Ukraine is something that has been long feared and forecasted, but many did not expect it to truly happen. Russia have officially begun its aggressive invasion, so what does this now mean for the markets? Welcome to our market analysis videos here at ZenFedEx. For those who are new to the channel, my name is Connor and I'm the Senior Market Analyst at the company, providing to you daily videos on market analysis and educational content. And for today's video, there's not too much more to talk about. I'm going to provide an update to yesterday's Russia-Ukraine video after shocking new developments and provide a forecast from a financial market point of view. Enjoy. So yesterday I did put together a forecast video which really did explain the impact of a full-scale Russian invasion of Ukraine on the key financial markets. And I thought, like I'm sure many others, that Putin would not actually send troops into like the Ukrainian-controlled territory and really ramp up the invasion. However, Ukrainians this morning have woken up really to a war on their country, and it all started at around 3 a.m. GMT today when Putin delivered a military operation announcement live on TV. He claims that this was in self-defense, and he says that any reaction from outside powers, from outside forces, are going to get an instant response. So quite shocking news really. And what's happened so far is Russia have decided to hit Ukrainian infrastructure with missiles, and Ukraine say they have suppressed some of Russians' aircrafts. Russian troops entered from all directions really, in what is being described, especially by Boris Johnson and by the West in general, as an unprovoked attack. There are 8 dead confirmed so far, but there are also many more missing. In Ukraine, the response really has been to flee the capital, flee Kyiv, with huge traffic jams being reported as well. And the response from all over the world is one of shock, first of all. Later today, the reaction from Europe and the US will be clear in the special conferences that are going to be out later today. However, it's likely that the punishment or the reaction will be in the form of sanctions, but this time people are hoping they're a lot stronger in general. And the effect on the markets, the financial markets this morning, has been quite astonishing really. And let's take a look at some of those key markets now. Okay, so straight on the charts now. I don't really know where to start. I'm completely doing this off the cusp because there are just moves happening everywhere. I'm starting on the Nasdaq because, I mean, stocks are just taking an absolute battering. It's a real massacre out there, and of course, I've been saying that stocks and risk assets in general have been bearish really since the start of the year. We had this brilliant test of the 200-day moving average, and since then we're moving down. I mentioned how important it was actually to hold this level, this swing low that we had here, and we actually started the week quite well. We wicked just below it, and then we closed above, and I thought that's our liquidity grab. This is a bullish sign. I think we was going to go up and test the 200-day moving average. No chance at all. We've smashed straight through it, and now we're testing lows. These lows down here, back from May of last year. I mean, we're already bearish. We're already seeing significant breaks of structure to the downside. I mean, short, medium-term bearish. What I would say is we are getting really a fire sale in terms of risk assets, and I think there's more downside to come. I think we could go down and test these lows down here around 12,200 by the time this is all over. Again, it depends on reaction, and it depends on what comes out of what's going on at the moment. Who can predict it now? All I would say is, again, just make sure you're managing your trades. But I see risk assets, I see the Nasdaq falling further. Bitcoin's exactly the same. I mentioned the divergence between Nasdaq and Bitcoin. How Nasdaq's created this significant lower low, which hasn't even been formed yet. But the Bitcoin seems to be holding. You see that divergence there. That suggests to me that the Nasdaq's really weak and that the stocks are feeling the pain more than Bitcoin. But Bitcoin's still on its way down as well. And if you watch any of our podcasts that I've been doing over the past few weeks, there was one about 2 months ago where I said, when me and Yorna predicted that Bitcoin would fall to 28k. I mean, that's a key order block level. What I'd like to see now, for me to be a buyer of Bitcoin, is price smash through this low, like it has done with Nasdaq. We get a wick into this, all this liquidity that we have sitting here, all these stop losses, before we get that move higher. but some more pain to come for Bitcoin. Gold, one of the biggest success stories so far. Really struggling for investment flows. Now, all of a sudden, we actually caught this fantastic buying opportunity that we had for gold, where we had that wick below, that liquidity grab that we had. The stop loss is all taken here, and then we've just shot really to the upside. 1950 easily broken. It's broken the 1960. It's broken this 1959 mark. It's broken this 1960. That's the January 2021 high and November 2020 high. We're currently at September 2020 highs. We're talking pandemic sort of highs at the moment, which shows the scale of the move. I think we're going up to test 2000. Natural gas and oil for that matter. Look at oil. It actually touched $100 per barrel. Brent actually touched 100. Well, it's over £100 per barrel. But crude oil, WTI, is actually, well, it's just bounced off of the $100 per barrel mark. We nearly had this buy opportunity. I saw the liquidity there. We didn't quite get tagged in. Highly news driven. If you notice something that's key between all of these markets, we have RSI indicators really in extreme conditions, in either an oversold or overbought territories. Oil is no exception to that. So really, as a whole, markets are moving crazy. I see oil continuing its grind to the upside. I say grind. It's barely a grind. I see natural gas breaking this 5.3 level. I see gold going to 2000. I see Bitcoin falling to at least 30k, and I see some more pain in the Nasdaq to come. These moves are quite extraordinary, and I would say the one thing, because the markets are so volatile, I've lowered my risk per trade. I've only gone to 0.5%, which I think is quite an important thing to do. I just think it's important to manage your trades carefully. If you are in a bit of profit, put your stop loss at your entry, because it's going to be so headline driven what's going on right now that there's going to be headlines that probably, by the time I get this video out, it's probably going to be another headline, and so it's impossible to react to them so quickly. So what I would say is, if you're in profit, stop losses to entry, run fairly tight stop losses, or just lower your risk in general. But that's it for today's video. Hope everyone enjoyed it. Hope you've liked and subscribed to the channel. Make sure you drop your comments in on where you think these markets are going. I could have gone through some more. There are just so many moves going on right now. It's quite hard to keep up, but I'm trying my best to give an accurate forecast on them as we go. So that's it for today's video. Hope everyone has a great trading day, and take care everyone. Stay safe.